Imagine this, right? A top executive just appointed to a really key leadership role suddenly steps down, barely months in.
Yeah, quite the surprise.
Yeah, exactly. And that's precisely what happened just recently at Bajaj Finance, which, is a huge player in India's consumer finance world.
Very big name, yes.
So this deep dive, it's all about unpacking these, well, unexpected leadership changes. We want to look at the immediate fallout, what it could mean for the company going forward.
And crucially, what the analysts are saying.
Exactly. So you walk away really understanding what's going on. And for this, we're digging into a flash note from Jefferies. They're an equity research firm.
Right. And their note came out July 21st, 2025, breaks down this whole development.
Okay, so let's unpack the core news first. Mr. Anup Saha, he was only appointed MD, Managing Director of Bajaj Finance BAF, back in April 2025.
Just this April.
And then, boom, July 2025, he resigns. Abruptly. The official reason. Personal reasons.
Which always makes you wonder a bit, doesn't it? Especially given how short that tenure was. I mean, April to July.
It's incredibly short for that level. And he wasn't new to the company either, right? He'd been with BAF since, what, 2017?
That's right, since 2017. And before that, he was at ICICI Bank. So,
Yeah.
a solid track record in finance.
Definitely. So what's your immediate take? Such a quick exit.
Well, it's certainly highly unusual. You just don't often see someone at that level leave so quickly after being appointed.
No.
And, while personal reasons is the official statement, what's really fascinating here is the timing of the media reports. What? Specifically ET, July 28th.
What did they say?
They suggested pretty quickly that Mr. Saha is actually one of 3 candidates being looked at for the new CEO job over at IndusInd Bank.
Ah, okay. So that adds a whole other layer.
It really does. It raises some interesting questions about, talent movement at the highest levels in Indian finance. The competition for top leadership seems intense.
Right. And Bajaj Finance's response to this sudden gap was just as fast, wasn't it? And I think for many, probably quite reassuring.
Absolutely. They brought back Mr. Rajeev Jain, the longstanding former MD. He is stepping right back into that role.
Feels like bringing back the captain. A familiar, very trusted hand on the tiller during a bit of a choppy moment.
Well, if you connect this to the bigger picture, I mean, Mr. Jain is widely seen as the architect of success for Bajaj Finance. Truly.
He built it up, essentially.
He was CEO for, over 15 years? He's really credited with creating their whole aggressive, tech-first lending model that, frankly, shook up the consumer finance space. So him coming back is a big signal.
A signal of stability. Sticking to the plan.
Both, I think. It reaffirms that core strategy. He'd recently been moved up to executive vice chairman, but now he's taking on the MD duties again as well.
Until his term ends, which is March 2028.
Correct. And the expectation is definitely for a smooth transition. I mean, his stature, his relationships with, everyone, stakeholders, the team are incredibly strong.
Plus, they have a deep bench already, right?
Yeah, exactly. BAF has a very seasoned top management team already in place. You've got key people like Manish Jain, Deputy CEO for B2B, Silant Dadwal handling B2C and SME, Harjeet Tour on far-out lending and partnerships, Sandeep Jain as COO and CFO.
So a lot of experience there.
A huge amount. Their collective know-how provides a really solid foundation, especially during a shift like this.
Okay, so stability seems assured in the short term. But what about longer term? Does this whole episode, this shuffle, change how we should think about Bajaj Finance's strategy, particularly around succession planning?
That is, I think, the crucial medium-term question. Yes, Mr. Jain stepping back in provides immediate stability, no doubt, and the existing team is strong. But
he can't be MD forever.
Precisely. Finding and grooming the next generation of leadership, the future CEO or MD, that becomes a key medium-term deliverable, as Jefferies puts it.
Right, and this is his 4th term now, 16 years in total. He's 54.
That's right, 16 years overall. Now, it's important to remember something here. Unlike banks.
The regulations are different.
Exactly. NBFCs, non-banking financial companies like Bajaj Finance, they don't need specific RBI approval for CEO or MD appointments in the same way banks do.
And those term limits for bank CEOs, like the 15-year cap for non-promoters.
Those don't apply to NBFCs either, so there's no regulatory pressure forcing a change.
Strategically.
Strategically, yes. Even without a regulatory push, you'd expect the group to be actively looking at succession options. It's just good governance and planning for the future.
Makes sense. Any other implications? You mentioned Bajaj Finserv.
Yeah, just a small point perhaps, but as Mr. Jain steps fully back into the BAF MD role, he might have to pull back a bit from any advisory work he was doing for the parent company, Bajaj Finserv. Just a bandwidth thing, probably.
Okay. Now, despite this, quite significant leadership change, Jefferies, whose note we're looking at, they're calling this whole thing only a slight negative.
Yeah, which might raise eyebrows initially.
It does, and they're keeping their BUI recommendation on the stock. That seems pretty confident. Why are they so positive still?
Well, their core argument, according to the note, really comes down to the underlying strength of the business itself, the franchise, as they call it.
So it's not about the leader, it's about the ship.
In a way, yes. Think about their market position, how deeply embedded they are, that huge customer base, their track record of innovation, like, the interest-free EMIs.
That was revolutionary at the time.
It absolutely was.
Yeah.
That creates a really strong competitive advantage, a moat. And Jefferies argues the company is just really well placed to ride some positive trends in India right now.
Like what specifically?
We're talking macro factors, things like potentially lower interest rates coming, asset quality generally improving across the financial sector, which reduces risk.
Fewer bad loans.
Exactly. And just a general pickup in demand for credit overall. Those are powerful tailwinds for a business like Bajaj Finance, almost regardless of who's in the top chair for a short period.
Okay, so the underlying business and the environment look good. And Jefferies backs this up with some pretty strong financial projections, don't they?
They certainly do. Their forecasts really emphasize that confidence. They're projecting, get this, a 20% compound annual growth rate CAGR in profit.
Wow, 20% profit growth. Over what period?
Over the fiscal years 2025 through 2028, so quite sustained growth. They also see return on equity, ROE, hitting a solid 19% in fiscal 26.
And what about loan quality? Any concerns there?
Actually, they see improvement. They forecast gross non-performing loans, the GNPL ratio, to decrease from about 1.0% in FY25 down to 0.8% by FY28.
So fewer bad loans on the books. That's good. Efficiency.
Also improving, the cost-to-income ratio, which is a key measure of efficiency, is projected to edge down slightly, from 33% in FY25 to 32% in FY28. Small improvement, but still positive.
Okay, those are definitely strong operational numbers. But for anyone looking at the stock, the big question is always valuation. What's Jefferies' target price saying?
Their price target is set at INR 1,044 per share.
And where's the stock trading now? Or, well, before this note.
The prior day's close was INR 948.95, so that target represents roughly a 10% upside from that point.
Okay, but 10%. How did they get to that number?
It's based on a sum of the parts valuation, or OTP. Basically, they value the different bits of Bajaj Finance separately and add them up.
Right.
And using that method, they value the main standalone lending business at about 4.9 times its estimated price-to-book value for June 2027.
4.9 times book. How does that compare historically?
Well, interestingly, Jefferies points out that Bajaj Finance is currently trading at a discount compared to its long-term average valuation multiple. So they see that as part of the opportunity.
Potential entry point, perhaps.
Yeah.
Can you just quickly remind us what Bajaj Finance does? The core business.
Sure. So it's a diversified NBFC. They offer a really wide range of lending products, consumer loans, SME loans, commercial lending. They're probably most famous, as we mentioned, for pioneering that interest-free EMI financing model in India.
Right, for everything from TVs to groceries.
Exactly, across loads of categories. And one more thing to keep an eye on, Bajaj Finance is actually due to report its first quarter results for FY26 very soon, on July 24th.
Ah, okay. So we'll get more updates and maybe some color on this leadership situation then.
Presumably, yes. That'll be one to watch.
Definitely.
Sure.
Now, whenever we look at a company, especially one that's had a bit of a shakeup like this, it's crucial to weigh the potential upsides against the risks, right? What could derail this positive view?
Absolutely. Jefferies highlights a few key risks to their valuation. First, growth could be slower than they expect. That's always a risk.
Okay, slow growth.
Second, higher than expected pressure on their net interest margins, or NIMs. Basically, if their cost of borrowing goes up faster than what they charge for loans, their profitability gets squeezed.
Margin compression, got it.
And third, any unexpected worsening in asset quality. If those bad loans start ticking up instead of down, that would obviously be a negative.
So growth, margins, and loan quality. The usual suspects for a lender, really?
Pretty much, yes. Those are the core things to monitor.
But then on the flip side, what could make things turn out even better than Jefferies expects? What are the upside risks?
Well, they point to potentially stronger growth, particularly in consumer durable financing and their rural lending business. These are big areas for BAF, and if they outperform,
That flows straight to the bottom line.
exactly. Also, if they manage to achieve even better operating efficiencies, maybe cut that cost-to-income ratio more than projected, that would provide an extra boost to performance and profitability, too.
Okay, makes sense. So just to kind of wrap this all up, we've seen this quite surprising leadership change at Bajaj Finance, an MD leaving very quickly.
Yeah, unexpectedly short tenure.
But it was navigated swiftly by bringing back Mr. Rajeev Jain, the veteran architect.
The known quantity, yeah, provides that immediate stability.
And despite that initial shock, the underlying business, the franchise, looks strong. And the financial forecasts, at least from Jefferies, remain pretty robust. They're sticking with that BUY rating.
It really does underline how important that deep-rooted business model and proven leadership can be, especially when navigating, unexpected bumps in the road in today's market.
It really does. And, thinking about this whole situation at Bajaj Finance, this leadership transition, it brings up a really interesting question for you, our listeners, to think about. In today's world, markets evolving so fast globally, is it more valuable to have a long-standing architect, someone known for stability and proven success, at the helm? Or is a more continuous cycle of fresh leadership, maybe even shorter-term stints, more essential for driving innovation and adapting quickly?
That's a great question. Stability versus constant renewal.
Exactly. What kind of leadership structure do you think best positions a company like this for real long-term growth and resilience in today's environment? Something to ponder.